and welcome. You're watching Ask PQ on Bloomberg Quint. I am Agam Vakil, and with me is Alex Matthew. Hi, Alex.
Hey, Agam. Well, if you've got questions on equity, then you know where to send them. You can send them to us on Twitter, Facebook, and WhatsApp. You can also call us on 022454044141, or you can mail us on askpq@bloombergquint.com. Only make sure to add the AskPQ hashtag. Well, Agam, it briefly hit that level, didn't it?
Yes, it did, absolutely, and we did see some gains come through as well. In fact, the benchmark indices advancing for the 5th straight day of gains, and we certainly are seeing some strength. And then Nifty, of course, hit the lifetime high and has come off to a certain extent, but well, green's all the same. In terms of some of your levels that we are watching out for in terms of the banking Nifty, it's been a little bit of a lag over the previous couple of days, but today we are seeing that strength return to the Nifty bank, essentially on the back of private sector banks. And in the broader markets, we are also watching out for the mid-cap index and the small-cap index, which are actually lagging a step behind, marginally in the green, but actually quite flat. But in terms of those, some of your big movers, that is gainers and losers, with respect to the Nifty, we do have India Bulls Housing Finance, once again one of the biggest gainers on the index, up 5.5%, followed by Tata Steel and JSW Steel. So the two steel counters leading the gains as well on the Nifty 50, and among other gainers, we are also seeing some strength in HCL Technologies, IndusInd Bank and Maruti Suzuki. Moving on to losers, however, what we are seeing some amount of weakness in your OMCs, which would include BPCL and IOC, along with HPCL as well to a certain extent, and not to forget something like a GAIL and L&T are also bearing down the indices to a certain extent. But well, on the whole, it's been another steady day of trade, and once again, all eyes on the benchmarks, which continue to show strength.
Absolutely. All right, let's jump straight to the questions. Let's introduce our experts. First of all, Sameet Chavan of Angel Broking and Gaurang Shah of Geojit Financial Services are here to answer all of your questions this afternoon. I want to start with a question for you, Gaurang, on a couple of stocks. Pritpal Singh wants to know about Abbott India and Sanofi India and whether or not these are decent with regard to the long-term fundamentals and getting in at these levels.
Well, thanks, Alex, and good afternoon to all of you all. So, both are niche and marquee names as far as the MNC pharma companies are concerned. Unfortunately, our fundamental team doesn't cover either of them, so it's going to be difficult for me to recommend buy, sell, or hold.
All right. On that note, let me just get a quick technical view on these two counters then, if we can. Both Abbott India and Sanofi India. Let's pull up the intraday charts and see where they're currently trading. Sameet, Abbott currently about 0.2% higher, and let's pull up Sanofi as well while we're at it. Just about flat, not moving at all, not budging at all. What is the call here with regard to the levels that you need to watch out?
See, as far as Sanofi India is concerned, the stock has clearly into a consolidation mode since last, I guess, 2 weeks. We have seen good traction in this counter, some buying interest from lower levels, but it is now trading around its major resistance zone. It's a a convergence point of 200-day moving average as well as 89 moving average. So 6,000, 6,050 remains to be a sturdy wall. So as long as it remains below that level, we expect this consolidation to continue. But once this stock surpasses 6,000, 6,050 on a closing basis, then we could see higher levels of 64, 6,400, 6,450 on this counter. On the low side, 5,600 remains to be a very strong support. Abbott India, on the other hand, clearly there's no major price action as such. If you see in last 1 month or so, this stock has been trading in a slender range of nearly 150, 200 points. That is 2 to 3% for this particular counter. So there's no major activity going on this particular counter. So I would clearly avoid, and I would rather wait for some kind of breakout to happen beyond 7450, 7600.
Right. Well, on that note, let's talk about one of the blue chips that is, in fact, at a 52-week high today. We're talking about Asian Paints. And we've got Ayush, who's wondering whether it makes sense to get in at these heady levels and whether or not there is a prospect for growth for the long term. The stock currently trading just about 0.2% lower in trade, having hit a 52-week high at 1,516. Gaurang, what's the view here on Asian Paints? Would you recommend this out of the list of the other blue chip names that have been doing particularly well in the recent past?
So Alex, let me say this. I think at 1,000, 1,100, 1,200, almost all the participants on the street felt that Asian Paints is a very expensive stock and richly valued, and that one should not be giving that kind of a premium to a stock like Asian Paints. From those levels, the stock today is at, I think, 1,500. Correct me if I'm wrong as we speak. Well, we do have a positive coverage on Asian Paints, our research department, and we do like the stock. The question is very pertinent. So I have to address one particular area, is that when you enter a stock in this kind of a market at this kind of a level, then the risk reward becomes a little bit skewed. That means your risk gets elevated and reward comes down. But my advice would be that if you want to invest, don't put all your money at current levels. Start at 25-30% of the total capital that you want to invest. And given the election scenario unfolding in the next, I think, week or 8 days or 10 days, I think the market should consolidate and correct. That should be used as adding to the stock from a long-term point of view.
Okay, well, that's as far as Asian Paints is concerned. We move on to the next query, which is from Akshay, and then he also has a query on Abbott India, which he's bought at 7,800. We've already discussed that stock, so we'll take up the other question that he has, and that's on HDFC Life, which he has bought at 440. Well, HDFC Life has seen a little bit of spurt today, but it's nowhere close to his entry levels. Gaurang, let me come to you on HDFC Life now. Would you ask Akshay to hang on if the plan is to stay with the long term?
I'm a little bit confused. HDFC Life, he's bought it at what levels?
440.
So purely long term, Agam, first of all, let me give a disclosure that our research team had come out with a subscribe recommendation for the IPO. And according to us, I think there is a huge market as far as the potential of tapping the untapped is concerned, given the population of our country and the percentage of people who are insured. So we remain positive. If in the back markets the stock moves closer to 350 or thereabouts, I think that's going to be a fantastic place to average, and for someone who wants to invest with a 2.5-3 year kind of a time horizon. Okay.
All right. Let's take Mayank's query. He has been following Maharashtra Scooter for a little while, and Bajaj Holding, in fact, and we spoke about this a short while back. Let's pull up the 1 month chart just to indicate to you the kind of rise that we've seen, and if we can possibly pull up a 3 month chart as well, or might as well pull up the year-to-date chart, and you'll probably see how it's gone. In the last month or so, it's about 18% higher. And if you look at the year-to-date chart, it will be a sharp increase that you see from the Feb levels that were there. But also Bajaj Holdings, another holding company that's seen tremendous traction in the recent past, perhaps in line with the way that their underlying stocks have gone. Just want to get a sense from Sameet on the charts. So if you're talking about these two counters, how would you look at them, and what levels would you recommend for somebody who's looking for a shorter end of the spectrum?
See, as far as Maharashtra Scooters goes, clearly there has been no stopping for this counter. We can see a series of high top, high bottom formation in all time frame charts, be it daily, be it weekly, or be it monthly. Momentum has been quite strong, but at such elevated level, I would be a bit skeptical on Maharashtra Scooters, especially 3900, 3950, according to us, would act as a very strong resistance. So in case of an existing buyer, he should rather look to book out somewhere around 3900, 3950, which is another 150, 200 points from current level. Fresh buying at current level is not advisable. In case of a decent dip towards 3600, 3550, you can look to get into this counter.
Okay, well, let's move on and talk about a query on Facebook. It's from Zaki, and he wants to know about Hotel Leela. From what we understand at this point is that, well, Hotel Leela has let go of a majority of its assets, keeping perhaps just one or two properties with itself. And ever since then, it's of course clearly seen, well, a decline. We must understand that this particular company has been really under pressure, specifically with respect to debt. It's currently at 11 rupees per share, so it's not like it's seen any sort of appreciation either. And that explains the kind of drop that you've seen in the value for that share, down 39% on 12 months basis, 35% down on 9 months too. And in the last 3 months too, it's seen a decline around 28%. I am not sure if Zaki is already in Hotel Leela or if he intends to, put some money in. But Gaurang, if you can come in on the hospitality sector as a whole. Firstly, what would you recommend to Zaki with respect to Hotel Leela specifically? And otherwise, if you zoom out, how are you viewing perhaps others in the sector, such as Lemon Tree Hotels or Indian Hotels for that matter?
So Agam, I will comment on the sector and a little bit comment on the stock Hotel Leela. Well, for the love of God, there are better sectors to invest your money than hospitality sector, and especially a stock like Hotel Leela. Now, since we are not enthused with the performance, we don't have coverage in the hospitality sector. We believe there are better sectors, and more importantly, when you have portals like Trivago or any other portals which offer huge discounted rates for rooms, then business becomes difficult and making profit becomes equally more difficult. For Hotel Leela, let me say this. You pick up the last 1 year, 2 year, 3 year, 4 year, 5 year track record. This has been a gross underperformer. Point number one. Point number two, if a company which is associated with hospitality business or hotels, if that particular company goes on selling one by one assets, properties, then finally what will be there in the balance sheet for them to continue to do business? So I hope he is not invested. I would stay away from this. I think if you want to invest in autos, which I believe strongly that the slowdown is just short to medium term and not structural in nature, Ashok Leyland would be the stock that I would possibly recommend in case if he is looking for that double-digit bargain in the market. Or you can possibly look at Federal Bank or a little bit 3-digit stock, something like an L&T Finance and Holding. These are better sectors and stocks to invest.
Okay, fair call, Gaurang. Raveen has got a question which I think Gaurang has already answered to a certain extent when he spoke about Asian Paints. He's saying, is there a fear of missing out with regard to some of the stocks and the rally that we've seen in the recent past? To each his own, right, Raveen? But I think what Gaurang was trying to get at is that don't put all your money in right now and to spread it out over a period of time. With that, I'll go straight to another counter that Gaurang just mentioned, Federal Bank. But we've got Rangarajan Balakrishnan, who's looking for a 6-month view and a target on this counter. The stock is currently trading just under that 100 mark at 96.4. Sameet, what are the charts telling you with regard to this counter in the next 6 months or so?
See, as a disclosure, within the mid-cap private banking space, we have been quite bullish on some of the names like KTK, RBL and DCB. But Federal Bank, yes, certainly looks good. We might see catch-up moves coming in from this counter as well. Chart structure looks quite encouraging. If we see weekly chart, once the stock surpasses 100, we could see a good move towards 150, 120. So since he has a time frame of 6 months above 100, this stock would certainly unfold the rally towards 150, 120.
Okay, let's move on and take a fundamental view on Praj Industries. We have a question on Facebook from Riddhesh Shah. Praj Industries, Gaurang, your view here, how are you placed on this one, if at all?
So, we covered the stock and our targets were in place. And let me say this, I think after a prolonged period of consolidation and going into hibernation, Praj has managed to cross over 100, 125. and currently trading at 151. Now, since our target were achieved, we had come out with a sell recommendation or book profits and drop the coverage. It's going to be difficult to recommend on buy, sell and hold.
Okay, no worries. Okay, if we can also take a technical view on Praj Industries, let's pull up perhaps the last 1 month or the last 3 months chart and see what it's doing or what it has done. 3 months basis, it actually has done an advance by as much as 24%. The country at and okay, so it's actually done quite well over the previous 1 year too, and up 80% in the last 12 months. Let me take this question up with Sameet too. Sameet, how would you go about Praj Industries? Do you see substantial up move or down move here?
See, I would rather expect consolidation. Since the October 2018 lows, if you see, the stock has already doubled in such a short span when, the entire broader market was seeing massive destruction. So clearly we have seen outperformance from this counter, and now with, broader market performing well, we are seeing some, consolidation in this counter, which is quite possible. So from here on, I would rather expect this consolidation to continue, wherein on the lower side, 140, 135 would act as a support. Higher side, 165, 170 remains to be a supply zone. So I would rather expect this stock, oscillating within this 20-25 points band.
All right, over the last 1 year, as you can see on the screen, 77% higher. We've got another couple of counters that we've got a question from. I believe Abhijit is asking a question for the next year or two. Or you can probably say, Gaurang, a medium-term view. He's talking about JSW Energy. We've got JSW Energy, that's perhaps another Abhijit, but JSW Energy and India Cements, two counters that he's probably shortlisted based on some kind of research that he's done himself. How would you rate these two counters? Both have seen a slight uptick in the recent past, perhaps the last month and a half. How do you rate the fundamentals going forward?
So, India Cement, we continue to be positive. In fact, there are about 7 or 8 companies in the cement universe that we have coverage. India Cement happens to be one of them. Continue to stay positive. On JSW Energy, well, Alex, we did see a positive move post the company or the management decided to scrap off their plans of entering EV vehicles, that is electric vehicles. But we did cover the stock JSW Energy a while back, and again over here we had a reduced recommendation, and our targets were achieved. If you do want to get into power generation, then our preference lies with Tata Power and NTPC.
Okay, well, moving on to the next question from Dipesh. He wants a technical view on 3 stocks. Dipesh, we usually keep it to 2, so I'm going to take the first 2 for you. First one is on Diwan Housing Finance. Let's pull that one up, and while we can have Sameet take a look at it. Of course, it's down 71% in the last 12 months, but the real question is, what is it doing right now, or say over the last 1 month or 2, because that is a crucial question. Are we expecting some recovery to come through? It's up around 13%, 13% in the last 1 month. But Sameet, I know this volatile is very, this counter is very volatile, and it's also very susceptible to news, but technically, how is it looking?
See, I'm honestly speaking, since the September fiasco, we have been avoiding this counter, and although, it has managed to give some kind of, rebound in last couple of weeks, we are still avoiding. From here on, yes, possibility of extending this bounce back move towards 170, 175 also cannot be ruled out. But I would rather, ask him to avoid such counters which are very volatile in nature. Rather, you can bet on other opportunity. There are plenty of other opportunities in the broader market. Sun TV is the one stock that we are liking from the metal space. Tata Steel, we are a bet on. Apart from this, within the mid-cap space, Engineers India is the one stock that certainly looks good. So there are plenty of other opportunities that certainly looks good. He can rather look to get into those counters.
Plenty of other opportunities. But Sameet, the other question he also has is on Punjab National Bank, currently at 96, 97. I'm looking at the charts. It's been a very steady month of March for Punjab National Bank, even though April has seen a little bit of consolidation. What would you do with the PNB at 96, 97?
See, in case of PSU banks, one has to understand that low-hanging fruit is already gone. We have already seen massive rally of nearly 25-30% in such a short span in a month and a half. Around 70-75, nobody wanted to buy this counter, and now suddenly after spike of nearly 25-30%, now people want to get into such counters. So at current juncture, I would avoid. In case of a decent correction towards 90 to 85, one can look to get into this counter.
Well, it's a fair point there. That's exactly what everybody's wondering, right? Should they jump onto the bandwagon at this point? Gaurang, you mentioned auto and you spoke about your pick in the sector and you said Ashok Leyland is your bet. But if you were to talk about the allied sector, which is the automotive ancillary space, we've got Bhavesh asking a question about a particular counter, which is Varroc. Would you place a bet on this counter or would you pick another in the automotive ancillary space?
Well, just to stretch that argument of Punjab National Bank, which was just discussed, I think at 70 and 75, if you would have asked anybody on the street, everybody would have said, boss, stay away. So, this is what, Alex, the thing is that if you are convinced about the stock, if you are convinced about the potential, and if you're convinced about the turnaround with investment time horizon, stocks definitely reward. So, and similar is the case, Tata Motors, I mean, at 150, nobody wanted to touch. At 200, everybody is saying buy. Similarly with Yes Bank. At 140, nobody wanted to touch. At 275, 280, everybody is saying buy. So, these are what, markets are all about. Anyways, to start on with the auto ancillary pack, well, we have coverage on Bharat Forge. We like Minda Industries. We like Motherson Sumi, Mahindra CI Automotive and Bosch. These are the coverages that we have our research department.
Okay, well, let's move on and talk about another long-term query. It's on Twitter from Kamlesh, and this is to do with the microfinance space. He needs a long-term view on Equitas Holdings. Can you take a look at Equitas Holdings right now at 138? Gaurang, coming back to you, how are you placed on this one?
Well, our preference lies with AU Small Finance and Ujjivan, Agam. On Equitas, we don't have a coverage.
Yeah, we can do.
All right. Well, I think on that note, it is time to slip into the rapid fire segment. We'll take as many queries as possible. Just a quick shout out to our guests to try and keep the answers as short as possible. Gaurang, not necessarily 5, but off the top of your head, Anand wants to know what are the stocks that he can consider for a SIP.
There are one too many and you have points for choice, and I have to give a rapid answer for this. So I would prefer HDFC Limited, L&T, Reliance, Tata Steel, ITC. I hope I'm short enough on that.
Yeah, absolutely.
Okay, fair enough. Moving on to a technical view on IRB Infra, we have a question from Brijesh. Okay, so there you have it. Short-term view on IRB Infra currently at 150 for Sameet.
See, 200-day moving average placed around 160. So once it surpasses 160, we could see a sharp move towards 175. So in case of a fresh buying, one should rather wait for a breakout to happen beyond 160.
Gaurang, overarching conversation about crude potentially heading higher with supply curbs coming in on a global scale. How would you rate the oil marketing companies? Ayush is asking about Indian Oil and BPCL specifically.
So you have rupee strengthening, Alex, against crude oil rising, and our view is that 70-75 is going to be the top ceiling for crude. It's not going to last over there. It's going to come down. We like all the 3 oil marketing companies, including Reliance Industries, because they are also into retailing of petroleum products.
Okay, and a question, a technical view on Philips Carbon Black. We have a question from Sunita, if I'm not mistaken. Yes, she wants a technical view on Philips Carbon Black. Sameet.
There is no major participation can be seen in this counter, and it is reflecting in prices as well. The stock is consolidating and struggling around 185. So wait for volumes to pick up and the stock to move beyond 185.
Okay, we've got a couple of stocks for you. Vipul wants to know, Gaurang, between Pidilite, Cochin Shipyard and TCNS Clothing, which one would you buy?
Only one or two?
Any one. You can say 1, 2 or 3.
Well, I would prefer Pidilite and Cochin Shipyard.
Okay.
Okay, well, fair enough. We've run out of time on the show, guys. So I'm going to take a moment to thank both our experts, Sameet and Gaurang, for helping our viewers with all their query. That is all that we have on this edition of Ask BQ.
As always, do remember that we're just a tweet, post or call away. So do keep your queries coming. If you missed any of the answers that were given on today's program, you can always watch it back on the episode on the website or on one of our social media platforms. Do stay tuned. Up next is Power Lunch. This is Bloomberg Quint.